Hi, this is Peggy from WAR. So today I interview my dear friend Sophia Ruffolo. So Sophia is the founder of FemBart, an organization supporting female entrepreneurs. So prior to founding FemBart, Sophia was CCO for the private banking arm of a large Canadian bank. So thank you so much, Sophia, for being here today, for answering the survey, and really looking forward to get your thoughts. So let's get going.
I'm excited. Thanks, Peggy, for having me.
Thank you. So first question, what are the major lasting impacts C-19 will have on the financial service industry from your perspective?
Well, the number one is speed. Speed to market is critical. So we see that you're not necessarily able to have face-to-face with people and not necessarily able to sign documents, not necessarily able to send snail mail, as we like to call it. And so there is going to have to be a transformation, a major transformation in how we do business and the speed at which we do business overall, but in the financial services industry, in order to compete, and have large financial services organizations and fintechs working hand in hand.
Mm-hmm. So the second point I'd like to make based on that is in terms of regulations, in order to be able to enable that speed or maybe hamper that speed sometimes. See new regulations coming, or maybe in a different area of financial services?
Yeah. It's interesting because the OSC in particular in Canada, but I think all of the regulators have tried to reduce certain types of regulatory burden. And we've been seeing that. And that was to enable speed. But the amount of time it took to get some of these regulatory burdens out of the way, we're seeing them 2 years later. And so both on the regulatory perspective and on the financial institution perspective and fintech perspective, there's going to be a need for faster pace, especially when you think about fostering capital markets, keeping them open for longer periods, for extended periods of time where you may not necessarily be able to function in the way, because today it's COVID, tomorrow it's something else. And being able to be agile while keeping capital markets open and protecting clients, protecting the consumers out there, the investors who are out there. And part of the concern is, sometimes you can tell somebody's a vulnerable client because you're talking to them face to face, or you may not have that type of access. So putting in mechanisms and actually leading in the mechanisms that you choose to put in to show the regulators, like, here's the next phase of where we should be heading, so that you're not catching up, you're not reacting, you're proactively finding those measures to protect consumers and customers.
So in terms of global financial order or global financial stability, what do you see the new normal to be with, all the huge level of debts that we see in many countries, most countries actually, the dynamic US, China, you're based in Chicago, all these things, what's your perspective?
Yeah, well, the new normal is certainly instability. I would say that's part of the challenge. And so what level of instability can we get comfortable with? What level of risk is the level by which we measure risk? Does it need to be the same? Does it need to be elevated? Does it need to be reframed? After 2008, the financial crisis, we sort of saw how much capital and reserves you should have, different reactions to that. The debt, the overwhelming debt that the globe is going to be suffering from post-COVID is going to require a lot of thought about how we value things, what the way in which we truly value assets. And do we look at them short term? Do we look at them long term? Are we diversified? Do we have a concentration in people and people coming into the office? Is that, and I don't like to use the word commodity when talking about people, but time. People's time is a commodity. And so has that dynamic changed, and can we value that in another way so that we look at our asset classes and asset base a little bit differently to counterbalance that debt?
Yeah. So piggybacking on that, the beauty of a crisis that it gives the opportunity to reset the competitive landscape. So who do you think, or what type of organization do you think will benefit from the crisis, and what type of organization you think will actually be on the other side of the fence and be harmed by the situation long term?
I mean, certainly the fintechs I think, are going to benefit from it, but both because of the agility in their ability to take risks, and in their ability and agility to move with pace, adapt their applications and processes faster. And so I think when you talk about large financial institutions, the ones that will succeed and do better are the ones that partner with the fintechs and are not first to market necessarily. They're leveraging resources that are available to them rather than necessarily competing.
So in terms of transformation for this very traditional financial institution, so you mentioned partnering with fintech as a way to transform. Anything else you see these incumbents over going to be able and over going to transform in the future?
I think we'll see a lot of transformation, not only from potentially partnering with the fintechs, but also in evaluating risk, which I touched on, and valuing assets. The other part is how you connect with your clients, how you connect with your customers, and I think we'll see a transformation in how maybe going back more into people's into the communities, and connecting with direct communities as opposed to having communities come to you and to your office. That, I think, will be a major transformation. It's much nicer to have a cup of tea on your front porch, socially distanced during easing of restrictions, than it is to, sanitize an entire office building.
Well, and at the same time, as much as I enjoy being able to do the transaction digitally online, that's very practical. Some transaction I don't want to do online. I know everyone is talking about, online mortgage. Well, that's great. But, if I'm buying my largest asset, I think I want to look at someone in the eye and not just in the eye through my computer,
Yeah.
Same thing, the person who's managing my wealth. Well, I really want to see that person quite often and not just, again, once in a while remotely. So this idea of transaction done digitally, amazing when it's low value and low amounts. But when you're talking about people retirements, their life savings, their main assets, that's the house, I think that the digital aspect is difficult. So I guess your thoughts are the same with the idea of having a cup of tea on the porch.
I think that people value or are reaffirming their value in relationships, and electronic there's a significant electronic burnout at the moment.
Yeah.
People aren't answering emails. They're going on social media, but the amount of time that they're spending on it is actually like they used to say, you get, 2 seconds and then they'll move on to the next thing. Now, if you get a half a second, that you've got to capture somebody's attention in that amount of time. And so there'll be there's a return to that one-on-one, more intimate setting. It just won't be in the way it was before.
Yeah, exactly. So talking about transformation, so what was your personal transformation during COVID? So did you start, we were talking about yoga practice with another interviewee. I know you're doing yoga. Did you start new habits, new good habits, hopefully?
Yeah. I wish I could say that I am a dedicated one type of thing person, but well, I've tried a lot of new habits. My newest one is sort of this bit of kickboxing exercise. So there's like some punching and some kicking. Me personally, I just don't move enough during the day, and so it really gets kind of all of your muscles activated. So that's my newest transformation.
Okay, well, kickboxing, that's not too bad. I'd like to see that. Well, thank you so much, Sophia, for your time, for your insights, for answering the survey. It's really, really great to have you today. And looking forward to the next series of interview to have you again. So thank you, and talk to you very soon.
Love it. Thank you, Peggy.
No, thank you.